Boom! What's going on, Investomaniacs? Your boy Night Rider here, and it's time for your Robinhood stock market update. Stocks have their worst day since March on investors' worst fear, a second outbreak. Clear the confetti from the New York Stock Exchange floor after an amazingly impressive 3-month rally where the S&P 500 gained 45% and recovered to being positive year to date. Pretty crazy when you think about everything that's going on. Optimism had hit its peak. Naturally, stocks took a dive. Investors bit their nails over health stats following out a couple newly reopened states like Texas, which reported its third straight day of record corona hospitalizations at 2,153 on Wednesday. It was one of the first states to reopen, which indicates the trajectory for other states as they reopen. Florida had one of the biggest jumps in cases for them since March. South Carolina hit a record high, and California said 9 counties saw a spike in new cases and hospitalizations. No parties at the Fed either. On Wednesday, the Fed projected that it would keep interest rates close to zero through at least 2022. The Fed wants us to spend our dollars on stocks and stuff and take out low-interest loans instead of hoarding it in a savings account, like me. No, I buy stocks. Okay, whatever. I still don't spend it. I invest it. So other people spend it, and then hopefully I'll make more. The problem, that 2-year low-interest rate Fed projection suggests the Fed's outlook is quite grim. Remember, you keep interest rates low in a weak economy, you raise them in a strong economy. So these guys are projecting a weak economy. The near zero rates are quite aggressive, but the Fed does think that they are necessary for our economy to stay afloat. Even though unemployment filings last week were the lowest in 11 weeks, 21 million Americans are still collecting unemployment benefits. Treasury Secretary Steven Mnuchin said, quote, "We can't shut down the economy again," in effort to slow the spread of the virus. While you may feel one way or another about this statement from a moral standpoint, make no mistake about it. When you hear a statement of certainty like this, it is a good thing as an investor. The takeaway: investors were ignoring the inevitable. Stocks ran too much. They shouldn't have been as high as they were. A pullback makes sense, especially with corona infections on the rise in many states. Economists have said it'll take years, not months, to recover from the financial damage corona wreaked. But falling cases, a wave of reopenings, and a surprisingly positive May job report kept investors optimistic and the market skyrocketing. The market was down just 5% from its record highs until yesterday. Does that really make sense, with everything that's going on, to be only 5% away from our record highs? For the time being, I'm staying long the market, but I will be making adjustments to which positions I am long if necessary. That's it for this video. If you enjoyed it, I'd appreciate a thumbs up and a sub. Peace.